Hey everybody, this is Brian Canary coming at you with, this is basically a video version of the financial guide to home buying. And it's great for new home owners especially, but you'll find some great tidbits in here for people who've bought many homes as well. So I'm going to kind of give you the summarized version. If you need more information, you can click below or send me an email and get in touch with me and I'll be happy to help give you more info. Here goes. What you want to do before you buy a home, if you're going to pay all cash, then most of the stuff won't apply. You just skip to the part about, picking your agent if you're going to use one and buying your house and closing. But if you're going to need financing to buy the home, a lot of that's going to focus on that most important part, getting the actual financing. So here we go. The first thing you want to do is you want to know your credit score, and it's important to know that. You can find out about it when you go through the process, but it's great to be going into things already knowing where you're at. And the best way to do that, you can get it for free, is go to a website called annualcreditreport.com. And you should be able to log on there. No money, cost you nothing, and it will not hurt your credit score to get that information. So that'll arm you with that information right up front. You'll know where you're at. It'll help you with your loan officer. And then it's possible that some people have no credit score. If that's the case, then I would advise, contact either a credit expert near you or a housing counselor, which again you can find online somewhere near you that can kind of advise you how to build that credit up. And then what you want to do too, when you're getting your free credit report, you want to check that credit report for errors, especially if you've got any negative credit or lower score. Make sure there's not any errors, because if there are, you can get those errors fixed. And again, you can look that up and find out how to go about doing that, or contact a credit expert to help you with that. Then what you want to do is sounds kind of basic, but you want to make a budget and kind of see where you're at in terms of what you feel comfortable with and affording per month, and kind of also get a list of your income and get a list of your debts, because you're going to need that. Your loan officer is going to need that. So you want to be organized and getting that all together. Next thing you want to do is you want to make sure that you have or are working on getting money in the bank for a down payment and closing costs. Even if you're going to go with a zero down program, you're still going to need to have money to show for closing costs typically. And then if you're going to receive a gift from a family member, a gift that doesn't need paid back to help with the down payment or the closing costs, again, that person giving the gift also has to have the money in the bank. I mention that because, this idea of mattress money doesn't work in lending with all the government laws involved with the Patriot Act and money laundering and so forth. There needs to be 2 bank statements, typically with seasoned having the money in the bank prior to applying. So you want to keep that in mind. Then after you do that, then you're going to want to basically get your documents in order so you're ready to shop for a mortgage. And what I mean by that is typically, we already talked about some of the things paperwork you're going to have, bank statements. Along with that, you're going to want to have 2 years worth of W-2s and tax returns, and you want to have page 2 of your federal tax returns signed. And then bank statements, pay stubs, and W-2s. So 30 days worth of pay stubs is also helpful besides the bank statements. You get that in order, have it ready. You're going to be asked for it anyway, and it's just much more helpful if somebody can review that for you right up front. Then what's going to happen is, I want to highlight this next section, you're going to want to make sure that you shop around for a mortgage, as they are not all the same. This is a very important point. If you take nothing else away from this whole video, make it this one thing, and that is the reason why you need to shop around, is because all mortgage companies and mortgage people are not created equal. There are vast differences in terms of closing costs, and there are differences in terms of rates. And you need to get exposure to at least 3. I'd say at least 3. You can go with 2, but at least 3 is better. And it's especially out there where people, they're stressful. You're in a high dollar environment, which is why you do want to shop around, because people want to, real estate's a very timely transaction. So people tend to want to rush, and we have busy lives, and so sometimes you take a shortcut. I'm just going to go with this guy. Oh, so-and-so told me to go see this guy. They're real nice people. They do a great job. Well, they may be nice people and do a great job, but if they're going to cost you $3,000 more up front in closing costs, and then they're going to cost you thousands upon tens of thousands of dollars over time due to the power of compound interest with their rates, is it really worth it that you didn't shop around? So the point is that the small amount of time you need to spend to talk to 2 or 3 different people is going to be well worth it, especially when you do find the low closing costs and the great rate provider that can do both of that and get the job done for you. You're going to be so happy that you did this. So this is my biggest point. If you take away nothing else, make it be that one. And then after that, what's going to happen is you're going to, by talking to different people too, you're going to learn about different loan types. Don't just settle for, one loan type, even though if you, in your mind, you want to get a certain product like a 30-year fixed. that's fine, but ask for a couple different options. Ask to see an ARM product, adjustable rate mortgage product, and ask to see maybe a different term, like a 15-year term, just so you can understand the differences between the different products, okay? Then you're going to learn about the loan rates and costs. As we said, that's all part of the shopping process. You're going to be able to compare apples to apples. And at that point, that you've gotten all that information together, you're going to be ready to get a pre-qualification letter. If you talk to your loan officer and you're ready to go, they'll let you know if you're at that stage, then you're ready to shop for a home. You're going to need a pre-qualification letter. And basically what that is just saying to any sellers or any real estate agents that, hey, I've been looked at by a mortgage professional, and I'm a buyer to be taken seriously. I can perform and buy this home, and that's what that pre-qualification letter sends a signal out to the marketplace that based on the information you provided, that you can buy a home. So you want the pre-qualification letter first before you contact an agent or start making offers on homes. So we talked about this. You're going to choose in your mind, you're going to want to start choosing the type of loan that best meets your needs. After you've learned about the different types of loans, you're going to want to pretty much know, when you get that pre-qual letter, you're going to want to know, hey, this is the kind of loan I'm going to go with, and it's going to be based on that kind of a loan. You're going to want to focus in on what kind of loan you want, and then you're going to go out. At that point, you're going to go out and find an agent if you're going to use one, and find the home that's best for you. And just a quick note on agents: if you're going to use one, then certainly they can be extremely beneficial, and they can save you a lot of money and keep you out of trouble. So no question that they're valuable. I would say, treat finding an agent similarly to how you would treat the number one thing I want you to take away from this video is to shop for a mortgage. Well, treat an agent the same way. Shop around for an agent. Get 3 names from people, some professionals or advisors you trust, because you want to know what they have to say. And you can learn some things along the way by talking to them, and then find out which one's going to work best for you. And the last thing I'll say on that is that sometimes you might feel socially obligated to go with somebody, maybe a family member, or, if you're real comfortable with them and you think that they're awesome and they're going to do a great job, and go for it. It's not a problem. But I don't want to see anybody pressured into using a family member, because this is probably the largest financial transaction in your lifetime. And just to take it casually and treat it casually, just because you know somebody, and again, you're going to take a shortcut, I'd recommend going ahead and spend the extra time talking to a few people, and then make your decision from there. So just a word of caution there. Then where we're at from there, let's see. So find the agent. Okay, so then one more thing to hit home is that after you make an offer, let's say you get an accepted offer, then again, this kind of goes back to my other big point, is that you actually can apply to 3 different lenders if you want to. And the reason why I say that is because the government set up this official loan estimate form, so that if you apply to, let's say, 3 different lenders, that you're going to get a loan estimate back from all 3. And that loan estimate is going to be an apples-to-apples comparison. Make sure you choose the same loan product, obviously, for each one. Then you're going to be able to compare in writing and see which one truly is better. I say that because sometimes it gets confusing with all the numbers and rates, and someone might have given you a verbal estimate when you were talking to them, but the actual written loan estimate is going to be the official estimate, okay? And you're not going to have to pay an application fee to get that. You can apply to 3 different places, get 3 different loan estimates, and then you pick the one that's best for you, and then you go with that one, and then you maybe have to pay an application fee after that, but you don't have to pay before you get that. So that's just an important point I want you to know about the official loan estimate. So then what's going to happen is, okay, you're going to go through the lending process. Go ahead and submit the documents that the lender has required, and if you already had them organized and ready, it'll be more helpful for you. But I want you to think about, when you're submitting those documents, think about that in terms of hours, not days. If they request a document, you want to get it in 24 hours or less, not 2 days, 3 days. Lending is very timely, real estate is very timely, and things can go by very quickly, so be very conscious of being quick with your documents. But by this time, you hopefully should have already gotten homeowners insurance quotes and find out which homeowners insurance you're going to go with. That's going to be required for your loan. So if you haven't already, get the homeowners insurance as soon as possible and get it to your lender. They're going to need it right away, and you'll want to have that information as well. So what you're going to want to do then is you're going to want to, during the process again, you're giving documents to the lender, they're going to be giving documents to you. You want to review all those lender documents, and don't be afraid to ask any questions. Your loan officer will be happy to go over with you, and just make sure you ask questions. You're going to see a loan estimate, and then that's one thing you want to review. And then as you get closer to your closing period, about either 7 days or maybe 3 days prior to closing, you're going to get what's called a closing disclosure. There'll be an initial closing disclosure, and then again, like a day or two before, you'll have a final closing disclosure, which gets all your numbers together and tells you where all the money's coming in and going out. And so again, don't be afraid to ask questions. So especially if you see any changes or anything changes a lot, you want to know why did this change, what happened. And then lastly, you're going to close the loan and buy the home. And while you're going through that process of closing, don't be afraid, again, to ask questions. Usually the title agent or attorney will be running the closing, and you'll want to ask questions to them if you have them. And then at that point, you're done. You purchased the home, and congratulations. It's an exciting time. A lot of times, you've signed more documents than you've ever signed in your life at one sitting. And so a lot of people just push themselves back to the table and say, whoo, I'm not going to have to do all that again until, for maybe 30 years from now or 10 years from now. So what I want to say to you there, and I'll wrap this up, is that typically there's opportunities that will happen for buying or selling another home or refinancing a lot faster than what you think. So keep your eye on the 10-year Treasury rate. If you can get a little graph and check it once a week, or stay in touch with your loan officer and keep an ear to the ground on those rates. They can change, they can go down, and if they do, again, if it's financially worth it to you, that you may want to contact your loan officer and say, hey, I see rates are going down. Is there any way I can save money? And the big key here is that it's all about the closing costs. If the rate actually is indeed lower, then you can save money by refinancing. But you want to make sure you have low closing costs, because quick example is that if you're going to save $50 a month, that's great. That's $600 a year. But if it costs you $3,000 in closing costs to do it, well, that's going to take you 5 years just to pay back that $3,000 and break even. So that may not be financially worth it. But if that same example, if you're going to save the same amount of money, $600 a year, but if your closing costs are only $200, let's just say, well, then that's great, because then you're going to pay back that $200 closing cost in 4 months. Then you're money ahead every month, making money every single month. So just a quick example. That's why low closing costs are so important. And keep your opportunities open. Keep your eyes open for a future real estate transaction, because now that you're a homeowner, you get the biggest financial investment typically. You're going to want to pay a little bit of attention to the rates and just make sure you have your pulse on them. So that's all I've got for you now. It's a quick summary. Any other questions, get a hold of me. Best of luck to you. Have a great day.